Okay, hi again everyone. This is Joe Henches with Beyond the Chart, and this is the technical analysis stock market update for the weekend. Today is February 1st. Happy February. We could say goodbye to January, which was not a great month for the stock market. So let's start off. The Dow Industrials was down 150 points on Friday, so the sell-off continues. Let me get rid of this for a minute. Okay, we are down here. I had drawn the lines. I have not changed these. These are the lines that I put on here the other day, earlier in the week. You can see the DI plus minus is clearly above the DI plus, so naturally we're in negative territory. We're getting a little bit of divergence in terms of the price moved to a lower low, but the DI minus did not go higher, and a little bit of divergence in here, but it's not super strong, so I'm a little wary of that. We did get a close below this line. So it's going to be real interesting, although we didn't get confirmation by the other indices. Okay, so what's the low here was 708. I talked about this. Low here was 703, and we closed at 698. So we closed below 15,700. We're right at this trend line. Okay, I want to talk about this on a weekly basis. We are getting divergence in here on the 10 bar RSI. Okay, we're clearly getting divergence on a weekly basis. That's negative. When are last times we had a little bit here. Okay, and the strongest divergences, I'll tell you, are 20 bars or less. That seems to be the strongest. The longer you go out in terms of divergences, it seems like divergence is a little bit weaker in terms of the signal. And you go back here to 2011, you can see the divergence that came in on a weekly basis. Divergence back here, 2007, that came in at the top of 2007. So, the bottom line is we're getting divergence, and that's not a great sign. So, we're down here close to the trend line coming up from November. I think I talked about that before. Let's take a look at a monthly basis since we just had a month that ended. Okay, so here's the trend line coming off of the bottom. Let me go back. Coming off the bottom in 2009, and you get this trend line coming up. We came to it here in 2011, we came back to it in 2012, we came to it in 2013, and now we're resting literally right on it. Okay. The other thing is, I think we're let me take a look at this, but I think we're getting divergence in here too. Yes, we are. Okay. So on a monthly basis, we're getting divergence. Okay. And when's the last time we got that in overbought territory? Okay. That back here in 2007. And in 1999, before the peak of 2000. Now we did get a little bit in here in 97, 98, and then we got a sell-off that came down to the 20 bar moving average. Stronger divergence here in the 1987 crash that occurred. But see, and on a monthly basis, you didn't get much of a warning. It's like you just got the divergence, and then boom, it happened. So the bottom line is, it doesn't necessarily, just because it happened in 2007 like this and it slowly rolled over, this is a warning sign that the situation is definitely weakened. So there's no guarantee that we are going to roll over nice and slow like this, like we did 2007, 2008, into 2008, if we're topping here, which this is an indication that something is topping, okay? So I'm just saying, I'm not saying we're going to crash here, but I'm just saying don't expect, it's not going to repeat exactly the way it did the last time. It never does. Okay, so here's the S&P 500. We're down in here. We're resting right at the support line, and we're down here by the Kellner channels. We're just going to have to see. I mean, we're below the 50-day. And we may get a bounce, back up to the 20-day moving average. New York Composite, very similar thing. This same line I drew on the New York Composite. I haven't changed any of this. Okay, so this is what I had on the chart on Thursday, and here we are resting in. We haven't broken down. We haven't closed below it yet. The Nasdaq. Similar type thing. The Nasdaq's just hanging at the 50-day. Okay, so it hasn't broken down to the bottom of the channel. It hasn't broken, the bottom of this, this trend line and this kind of support area down here around 4,000. It was actually, it was down 19 on the day. Okay, short-term trading index. Short-term trading index 1.56. You can see this has now started to pull back up a little bit, heading into this direction towards the oversold area, but it's not up there yet. So no real strong signal. The VIX was up naturally on a down day like we had. The VIX volatility has increased quite a bit. We're getting a little bit of divergence in here. That the VIX went to new highs, but the indicators are not going to new highs. That could be a signal that we might get a little bounce and a bounce back. And given the kind of moves we had and the week we had, it would not be surprising to get a bounce. Okay, to get that. Let me go the high-low indicator. Pulled back down. We had more new lows than new highs for the day. Still just kind of in this downward trending channel that I had picked up last week. So we'll see what happens, see if it starts to break down out of this or just what. We're right in the middle of everything. So we're not near an extreme point by any means. Okay. Let's see, we talked about trend, we talked about the VIX. I want to talk about XLF. Well, I don't want to go there. I want to talk about the short-term financial trading index. Okay, so here we are on a daily basis. Clearly, negative downtrend, clustering down in here right at support near the top of this sideways consolidation type of channel. Okay, so here we are just clustering. No strong real signal here. But when you go to the weekly chart, I want to look at this on a weekly and monthly basis. You can see we're closing down here 2106, the lowest close of the last 12 weeks. I looked at that earlier. So we've got DI minus crossing DI plus, divergence coming in here. Of course, that's a little bit longer term type divergence. And then on a monthly basis, I think you can see we're getting the same type of divergence that we're getting on the Dow. Okay, and so it's coming in here just the way it did before it rolled over at the top. This was June 29th, 2007. Okay, and remember the stock market peaked in July, sold off, came back, went to a slight new high in October of 2007, and then that was it. So now we're getting divergence on the financial ETF. And it'll be interesting. I think we're going to start to see this thing roll over. Okay, so now I want to take the weekly look at Apple real quick. We're down here hugging the Keltner channel. We're getting close to the 200-day. We had this big sell-off, a big move to the downside. We'll see if we get a snapback little rally, close part of this gap, or whether or not we continue to move down. Given the move that we had, I wouldn't be surprised to see a little bit of a snapback. And again, it's going to be interesting to see how fast does this thing move down here to get to the bottom of this wedge, if that's indeed what it's going to do. And that's what it looks like to me. The other thing I wanted to look at was BIDU real quick, because this is the Google of China. We talked about this on Wednesday. Clearly, Thursday and Friday sold off some more. It's in a downtrend. Don't see any real sign of turning. Hasn't gotten itself oversold yet. On a weekly basis, there it is. On a weekly basis, we've got strong divergence coming in at the top of this wave, at the top of this wave. So on a weekly basis, we definitely got strong divergence, and I think we're at the top of 5 waves. Okay, that's it for this weekend. I'll be back tomorrow with a look at trade ideas for the coming week. Thanks for stopping by. This has been Joe for Beyond the Chart. Have a great one. Super Bowl Sunday.